Hello, everyone. People are starting to roll in now that it's almost 11 a.m. If somebody could use the chat and let me know that you can hear me, I would appreciate it. Okay, wonderful. Somebody can hear me, so that's all that matters. As long as one person can hear me, we're good. That's a good assumption that everybody can hear me. So we're going to get started here in just a moment. It's 11 o'clock right now. We'll just wait a couple more, a little few more seconds here, see who else comes in. While we're waiting for a little bit more, there is the chat option and the Q&A option. If you want to start putting any questions you have in it, I'll explain how this works in a moment for those that are brand new. But if you have any tax related or business related questions, you can use the chat option and the Q&A option. We'll wait till 11:01 and then we're going to get started since everybody's time is very valuable and we only have an hour to talk. Okay, we are going to get started. What I'm trying to figure out here. I apologize now. Now I'm trying to figure out what I'm missing here. Um, how do I do apologize. I do this all the time. There we go. Okay, welcome everybody to Tax Talk with Corey. This video is being recorded. The Zoom meeting is being recorded, and therefore you ask, when can I get this? So this will be uploaded to our YouTube page. We have a playlist for Tax Talk with Corey, and there's other stuff also uploaded on our YouTube page as well. So definitely check it out in the future, and you will be able to find this recording. And I am actually getting the page for us right now, and I will put it in the chat. There we go. Let me copy this and let me put it in the chat for us right now. There we go. I'm also going to put my email in there as well for future reference. There we go. Okay. And it went to everybody. Yes. So Tax Talk with Corey. For those of you that are brand new to this, you have no idea how we're going to do this. This is different than any other webinar that you've been to probably. This is more of a Q&A session. So in the first few minutes, I'm going to tell you a little bit about the SBDC, and we're going to look at the tax tip that was on the picture, the image, and what you see on the screen right now, dealing with extensions. After about the first 15 minutes here, we're then going to transition into this Q&A session. I will be done talking, as in like teaching, but it's going to be an opportunity for you to ask questions from me. I am an accountant by trade. That is my education. That is my experience. And so you get to have me for about 45 minutes to ask me tax related questions. And even, I don't even limit it always there, just any type of business related questions that I open it up to you to ask, because really any business related question can somehow, some way be tied to taxes, whether it be federal, state, or local taxes. So it's a back and forth. You have the chat option that you can type your questions into, and there's also the Q&A area that you can type your question in. So use either one of them, whichever works best for you. I will look at both of those and I will try to answer your questions. We will do this until 12 p.m. If you do not have any questions, feel free to put that in the chat or the Q&A as well, just letting me know that you don't have a question, and then I won't ask you to see if you have a question. A lot of people just come back to this on a monthly basis to listen and to learn from other people. Other times, they come in here with questions. So this is your opportunity. Let me first start out with a disclaimer as we are about to get into the tax questions here in a few minutes. The disclaimer goes something like this. Any advice shared reflects our professional judgment based on our current understanding of tax law. This service is offered at no charge, and the SBDC is not responsible for misinformation. So I will take a little bit of information that you give me in the chat or the Q&A. I may even unmute you if I need more information. I take that little bit of information and I try to answer your question in this Q&A session. If you need further details, further direction, then you're best to reach out to your local SBDC consultant that you have in your part of the state of Pennsylvania, and definitely reach out to your accountant and or your attorney for more information after today. So let's jump into a little bit about the SBDC. We're an entrepreneurial training program that provides one-on-one business consulting at no charge to those that are looking to open a business and those that are already in business. We also offer training events like today that are offered at no charge. And then also some of our training events, there can be a fee to it. A lot of them are offered online. Some of them are offered in person. What we learn about you if you touch base with a local SBDC is what we learn about you is confidential. We're not going to go out on the street and talk about you and gossip about you. We've been around for over 45 years now, the SBDCs across the United States, and our reputation is great because we do hold confidential what we learn about you. The only way that we share information is if we ask permission from you. We work with for-profits. We do not work with nonprofits. And so if you're a nonprofit here today, please stay with me. Don't leave. You can still learn from today and still ask your questions, and I'll try to answer them to the best of my ability. However, one-on-one business consulting after today with your local SBDC is for-profit organizations. As long as you have less than 500 employees, we can still work with you as well. And then as an SBDC, we do not have money to lend to you. Rather, we are business consulting. So we help you find the money, and we help you with general business consulting as well, which you're going to see a slide here in just a moment about what else we do. There are 15 SBDCs across the state of Pennsylvania, and today is National SBDC Day. So we are celebrating this across the nation because every state has SBDCs as well as our U.S. territories. The way that this service is brought to you at no charge is because we are funded by our wonderful universities, Penn West Clarion being my university. But as you can see on the screen there, every SBDC in the state of Pennsylvania is located within a university or college, and we're forever grateful to them for being a part of our life for, again, over 45 years. We're also funded at the federal level through the Small Business Administration, and we're funded through the state, which is through the DCED Pennsylvania Prep Program. So we're forever grateful to them as well. Everyone that funds us brings this service to you at no charge, which is a very valuable service. I talked about everything on this slide pretty much, so you can just kind of skim this, and I will also email these slides to you after today's training. At the bottom of this slide, though, is a website that you may want to jot down or wait for the PowerPoint to come to you later on. You want to go to pasbdc.org. This is the website where you'll find all types of trainings offered across the state of Pennsylvania. And just like this one being a webinar, it doesn't matter where you're at in Pennsylvania, and even where you're at in the country or in the world, you can attend this training. You are part of a business life cycle right now. Whether you are a business owner or whether you're an employee in a business, the business is in this life cycle somewhere. So you can picture yourself where you might be at. And now take a look at these bubbles, all of these different services that the SBDC offers. We do not do your taxes. We do not represent you legally. We do not sell you anything like an insurance agent or something like that. There are professionals for this that we push you off to, we refer you off to when the time is right. So even a marketer to help build your website, we're going to refer you to those people in the future. We're not going to do that for you. We're general business consulting. We're here to answer your questions, educate you, lead you, direct you, and send you on your way. But as I mentioned, we're with you from anywhere from the beginning of your life cycle, but where you're starting your business, all the way to the point of when you're ready to close your business because you're going to sell it or something like that. So hopefully you see something on this slide that really interests you. You can reach out to your local SBDC consultant after today to say, hey, can you tell me more about this? How can you help me with this? So let's get on to our tax tip. Our tax tip today was talking about free extensions to file but not to pay. We are in tax season right now, whether you're an individual, whether you're a business. Of course, we're talking about businesses today. So, what businesses were due just a few days ago? That is your partnerships and your S corporations. They are due March 15th. If you did not file your partnership or your S corporation by March 15th, I at least hope that you filed an extension. Now, a partnership and an S corporation does not pay taxes. The income, whether it be a profit or a loss from a partnership and an S corporation, actually flows to the individual owners through a Form K1. Now, if you're already in business and you've done this for years, you already know what I'm talking about. If you're brand new, though, as a brand new partnership or S corporation, that um, that tax return will what I call spit out, okay, or produce a K1 form. And a K1 form then goes to the owners of the business, which then goes on to your personal tax return, which is due April 15th. But that partnership and S Corp still has to be filed by March 15th. So if you haven't done the extension or filed the return yet, you really need to get a hold of your accountant and get the ball rolling. It's too late to do extensions. So if you have not done the extension and have not filed the return, you need to get it filed ASAP. The reason for that is because penalties are waiting for you because you haven't filed on time. And the penalties go by the number of owners or partners or S Corp shareholders, and it goes monthly. So you got to get this filed immediately if you haven't done so already. Now, let's talk about our sole proprietorships and our LLC sole proprietorships. When there is one owner and one owner only, that goes onto your personal tax return. So, we all file a 1040 right now, and then that 1040 has many different pages. One of those pages for a sole proprietorship or an LLC with one owner goes onto a Schedule C. If you are a rental business, then that goes onto your Schedule E. If you're in the agriculture industry and you're a farmer, that goes on to a Schedule F. That's where your income and your expenses go to. Your business goes on to either a Schedule C, Schedule E, or Schedule F on your personal tax return. They are all due April 15th. April 15th. When the time comes, if you're not ready to file it yet because you're still gathering information, then we can do an extension. And that is the point of the tax tip today, is you can do an extension by April 15th. Now, if your business, whether it's a business, a rental business, or a farm business, if it shows a profit at the end of the year, you owe federal, state, and local income tax, as well as self-employment taxes, which is like your Social Security and Medicare tax that you see withheld on a paycheck. Again, if you're showing a profit, you're going to owe money. And if you owe money to the IRS or Pennsylvania or local, just because you file an extension, it does not give you a free right to pay later. the payment is still due April 15th. So an accountant that you're working with, and if you have a business, you definitely should be working with an accountant. Don't do this stuff yourself. Um, if you file that free extension, when you file that free extension, you should still send in a payment to that taxing government so that they don't penalize you because you're paying late. There's a free extension, but not a free payment late. I hope I got that across to you. If you still have further questions, we're going to be flowing into this Q&A session right now, and we can talk about questions related to these extensions. But of course, any other business related tax questions you have, or in general business related questions, I am more than willing to try to answer. So that's it for my tax tip. I hope you learned something from that right now. And it is 11:15, so we have about 45 more minutes to start answering your questions. Use the chat option, use the Q&A option to ask your questions. So I'm going into the chat right now, and someone's saying, I'm listening and learning. I'm an artist who sells paintings and does part-time teaching. Cool. Okay, yes. So there's lots of stuff involved being an artist. There's also some grant money possibly out there that is available to those who are artists. So if you have not tapped into what we call the CEAP, or I say the SEEP grant, then you want to reach out to your local SBDC consultant and ask them to help you determine if you're eligible and how do you apply for it. It's a $2,000 grant. Check into it. This is open to the artist industries. Okay, I'm going to go over to the Q&A now. And you might be like, well, how'd that deal with taxes, right? Well, if you get that grant, okay, there might be you might have to claim that as income. Then you have expenses that you might be able to write off. You have to work that into your tax return, so it definitely affects your tax return. I'm going over to the Q&A just because it popped up before the next chat did to me. So in the Q&A, it says, I have a small downloadable PDF business selling. Okay. Let me try to see here. So this person is selling homeschool resources like unit studies, field trip ideas, and language and arts and parent support. Okay, so you're selling these downloadable PDF documents for homeschoolers. Awesome. My original understanding was that Pennsylvania tax was only due on hard copy products and not downloadable products. I recently learned that anything I sell, hard copy or electronic, is taxable if it is sold to a Pennsylvania customer. How do I know if I owe sales tax in other states, as I have sold electronic files to customers across the US as well as Canada and Australia? Wow, okay. Yeah, so it takes a lot of research to do something like that. And something that may be helpful to you if you're not already utilizing it is a bookkeeping system such as QuickBooks. QuickBooks will track sales tax across the country if you have a subscription to QuickBooks. So if you're not using QuickBooks for a bookkeeping system, you may want to check into it. I say QuickBooks just because it's the most popular one, although there are other QuickBooks or other bookkeeping systems as well that you can subscribe to online. And so whichever one you decide that you want to subscribe to and use, you just need to see how do they handle sales tax. Now, do they handle sales tax for Canada and Australia? I don't know. QuickBooks is a worldwide company, so it would take a little bit of research to figure that out. Therefore, your question is how do I figure this out? Do some research with QuickBooks. You might want to use artificial intelligence such as Gemini or ChatGPT or one of the other ones that are popular, and start having some conversation with AI back and forth, seeing if it can help you answer the question. But do understand, just like our human friends, AI can be wrong, and we've heard that, I'm sure, over and over. So take what's there with a grain of salt. Ask it for sources. Always ask it for sources so that you can click on it and go to the source. And then definitely pull in your SBDC consultant wherever you might be located and see if they can help you out with some of this as well. See if they can help you verify what you've done as research for yourself. And if you're someone that doesn't want to tap into AI, that's totally cool as well, because definitely the free version versus the paid version is going to can give you different information as well. Of course, the paid version of AI dives deeper. So that's where we want to keep the human in the loop. Reach out to your local SBDC consultant for some additional assistance, and then do research with QuickBooks or whatever bookkeeping system you're using. If you're using Square or something like that, do some research into it to see how it handles sales tax as well. And then if you do need a sales tax license, say for Pennsylvania, as you may or may not already have, definitely reach out to your local SBDC consultant for assistance in obtaining your sales tax license. And of course, your accountant can help you out with this as well. So hopefully I got a lot of that information for you. Over to the chat here. Okay, so this person's just saying, "Hey, I'm helping my son. He started a pressure washing business, and we're still learning." Absolutely. So, for the pressure washing business, you do need to look into sales tax since we're talking about that right now. That is a maintenance type of business. So I do believe you have to charge sales tax on pressure washing, but don't quote me on that right now. That is something I would want to look up and verify. So probably the best thing to do is make sure you reach out to your local SBDC consultant. I say this because you are located across the state. I don't know where you're located at. I even had somebody internationally attend. I do believe it was my last tax talk. So you need to always reach out to your local people and talk to them about it. But I do believe you have to collect sales tax, so you need help doing that or do it yourself. Okay, and applying for a sales tax license, it can be a do it yourself process. Also, for just a second here. Oh, okay. There's a few chats going on here. I kind of it was scrolled all the way to the bottom here. I do apologize. So the artist, I'm not sure if you started your business or not, but you may need to register a fictitious name, get an EIN number. This goes the same thing with the pressure washing. That's why I was going back up to the artist was, hey, do you have an EIN number? Do you have a fictitious name? Are you wanting to form an LLC? And if so, you need to form that LLC. You need to come up with that business name to register the your LLC with the state of Pennsylvania. Um, and then like, do you have insurance? But you really can't get insurance until you registered your fictitious name and got an EIN and registered your LLC. So lots of stuff going on here that you may want to be thinking about, and that's where you got to be talking to someone. I want you to talk to your SBDC consultant. And here's one reason. And I had a client, I don't know if she's with us here today or not. I had a client recently, and then I just had another person reach out to me last night that I needed to respond to. I check my email on my phone, so I see these things. But they used private organizations like LegalZoom to form their LLC when you can actually do it at no charge. Okay, other than what you have to pay to the state of Pennsylvania to form an LLC, which is $125. But you don't need if you're low income, like you don't have a lot of money to get your business up and running right now, you can do it yourself through the state of Pennsylvania. So if you talk to your SBDC consultant, though, they can help you with this. And versus going to LegalZoom and paying $600 to $1,000 to get that done. Of course, your attorneys can do it for you as well. So if you're not necessarily earning for money, then utilize your local attorney. They would be glad to help you. Okay, let me go back down through this here again. This person here is saying, I have just formed the business. I'm not sure where that one's at. Okay, but I've just formed a business last month and have not made any sales yet due to not officially launching to the public. Do I still file a return? So scroll down through here. Um, so as a sole proprietorship, if you formed a sole proprietorship, they basically say if you don't have any income, if you do not have any expenses, you do not need to file a tax return. And if you just did it last month, that would put you in like January, February that you started the business. So there's no tax return to file until next year at this time. But if you started the business, say in 20 December 2025, then you may need to file a tax return in 26 for 25. Okay. If you had income and or expenses. Now, sometimes if you just have some small income, some small expenses, not income, but some small expenses like the LLC formation and that, you can actually pull that forward into the next year when you actually do have sales. And we call those startup costs. So if you have further questions, feel free to elaborate some more. I'm just trying to tap into what you provided here in your chat. Um, Let me go over to the Q&A now, and then I'll come back to the chat. Okay, someone's saying here at some point right now, can you explain what happens in the following scenario? This is going to be good. I haven't read this yet, by the way. I stopped providing services. Okay, so stopped providing services, handyman services in 25. I planned to close a business, but ended up doing a few extra jobs. I didn't think I would have any profits. I had some deductions for tolls. While doing my personal income taxes, I realized I have $300 in profits that I didn't pay state taxes for. How will the state handle this? I started the business in September 2024. Um, so you're doing your personal taxes, I'm assuming, for the tax year 2025, last year. And while doing your personal taxes for 25, you realize that you had some profits um, from doing the handyman services. How's the state going to handle this? Well, I mean, you're going to build your income and expenses into your personal tax return, right? If you're saying that you already filed your personal, see, now I got to take a lot of guesses at stuff. If you already filed your personal tax return, and then after the fact, you realize that, oh, wait, yeah, I did, I should claim my income and expenses for my business. What do I do now? Well, go to your accountant, and your accountant can file as long as we do it before April 15th, they can do what they call I think it's called a superseded tax return, which basically means it's kind of like an amended return, but it's done before the due date, April 15th. So it's like, hey, telling the IRS and Pennsylvania and local government, because this business does show up on all three of them. It's telling Pennsylvania that we already filed a tax return for this tax year, but it's not the due date yet. So we're filing another tax return. Ignore the first one. Just pay attention to the second one because we haven't reached April 15th yet. Now, if you don't do it until after April 15th, then when they file the amended return, that says, okay, we already filed a return before April 15th. Don't ignore it because we're just showing you some changes that need done. This is after April 15th, and that's why it's called an amended return because it's saying don't forget the first one, but here's a couple extra things to add to it in order to file an amended return. If there's any kind of sales tax involved, then yeah, you need to get your sales tax paid. You can go back in time and pay your sales tax if you haven't done that. Um, and you said you plan to close a business, but you didn't. So that means the business is still open. So yeah, file a tax return. Hopefully that helped. Let me come over here to the chat. Do I need to list my LLC single owner with my local tax return? If so, what form is that? Yes, you do. But again, as I mentioned earlier, your single member LLC goes onto your personal tax return. It will go on as a Schedule C, assuming that you're like a small business, or it'll go onto a Schedule E if you're a rental business, or a Schedule F if you're a farming business. And so it goes onto your federal tax return, one of those forms. It also goes onto your state tax return, Schedule C, Schedule E, Schedule F for Pennsylvania. And then it also goes onto your local tax return. Basically, I don't know what line it is. There's a net profit area for a Schedule C business to go onto your local tax return. And then your accountant will attach to your local tax return a copy of your Schedule C, your Pennsylvania Schedule C with your local. If you're a farmer, then your accountant will attach or make a copy of your Schedule F to go with the local. If you're a Schedule E, though, there's an exception. Schedule E income and expenses from rentals is considered passive income. And so the Schedule E does not go on the local tax return at all. So hopefully that helps. Okay, let me see here. Going over to the Q&A. If I wanted to close an LLC, what steps do I need to take? Well, I have a client right now that I need to respond to her email that I'm helping right now. It can be a do-it-yourself process. There is some steps involved in it, some forms that need filed. It's best to get an accountant involved in it because the accountant needs to do a tax clearance, which is filing a document with the state of Pennsylvania stating that all of my taxes are up to date, but can you double check? Telling Pennsylvania, double check because I want to close my business. And then once Pennsylvania comes back saying, yes, we have cleared you, there is no taxes due for the business that you want to close down, then you can file forms for an LLC, which is a dissolution of the LLC. But we can't do that until the tax clearance is done. So I thought there was another organization that helped out with that, but they I guess do not. So I need to reach out to this client to say, okay, you need to do a tax clearance first. I mean, you could do it yourself, I guess, but normally the accountants do the tax clearance with you because they got to make sure the tax return's filed. If there's sales tax, they got to make sure the sales tax is caught up as well. And so they help out with that part, and then the DI, either the accountant or the do-it-yourselfer can file the dissolution of the LLC. Good question. All of these are always good questions. Next one, blessings. Blessings to you too. Thank you very much. I am moving into running a small business that I currently work for, producing fermented foods for a health coach for her local clients. Sometimes I stop and reread it again. I read it out loud, then I gotta like get it to sink in. Okay, so you currently produce fermented foods for a health coach. I have not had experience in these matters as of yet. How would you suggest I become aware of all of these taxes necessary? Is there a class about setting up to address these concerns, please and thank you? Yes. So, our small business development centers across the state of Pennsylvania, we offer what we call a first steps to starting a small business training. So if you go to our website for training, which was in the slides here, and I guess I'm still sharing the slides, aren't I? So if you were to go to this website at the bottom here, www.pasbdc.org, you can see every training that is offered by all of the SBDCs across the state of Pennsylvania. So look for the first steps to starting a small business. Here at Penn West, all of ours are offered online. We do offer like a once a month Saturday. I believe it's in person or webinar. I'm not sure of that one now. Boy, I just drew a blank on that one. We do offer a hybrid. I think it is. I think the Saturday's online. We offer a hybrid that is on a Tuesday afternoon. So you can either come to Clarion in person or attend online. So other SBDCs will have their way of doing it either in person or online. And it goes through the steps of starting a small business. And then also there are all types of other trainings as well. So you want to learn more about marketing, you want to learn more about social media, or I've even seen ones where you build websites, how to build a website. I've seen human resources trainings. I've seen accounting and bookkeeping and record keeping trainings, all types of trainings on that website that I put on your screen there. So click on it, click on training. There'll be a button for training. Click on that and just search down through. You can even filter it by the type of trainings that you're looking for. So definitely sign up for them, plan to attend them. So very useful. And then, of course, I mean, I have to say, if you're not already in touch with a local SBDC consultant, work at getting in touch with them because they can help answer and walk you through and direct you in all of these matters. Also, another website you might want to check into. I don't know it off the top of my head, but I'll type this into it. Pennsylvania, no, what am I thinking here? Pennsylvania One Stop Shop. So I just put it in the chat there. If you do a search on the internet for PA One Stop Shop, they you can build a checklist on that website for starting your own business. It's very useful as well. Okay, next up. Okay, so this is maybe the same person, I'm not sure, but like power washing, soft washing business. You heard that you can save the receipts for the machines that you buy and you can get a write-off for the startup costs. Could you tell me about it? Absolutely. Yeah, anything you buy for your business, just think of it this way. Anything you buy for your business is a business expense in one way or the other. If it's an expensive item, especially over $2,500, then you have to depreciate it, which is taking the cost of that expensive asset and spreading it out over a number of years according to the IRS rules. If it's under $2,500, it can be completely written off. Although sometimes even $1,000 item, we still might want to spread the cost out over a number of years called depreciation. Uh, and I say we might want to, and that is why you need to have an accountant do your tax return. Do not do it yourself because some things are cut and dry, black and white. Other things, there is options available. Okay. And computers, technology doesn't always know what option to take. It takes its best guess as technology and it goes with it. Whereas an accountant, a human being, looks at your whole picture, looks at your business, looks at everything going on in your personal life, such as your W-2s and your interest income, dividend income, um, investments that you sell, such as stocks and things like that, and other businesses and other rentals and that you might have in your tax return. There's all kinds of stuff that could be in there. And so an accountant looks at that whole picture and they take when they have the ability to choose options that like depreciation, then they do what they feel is best for you. And they may call you and ask questions or text you or something, ask questions to try to come up with what they feel the best choice is. Or just from doing your business year after year, they know what needs to be done because they've been doing your return for years. Um, so and then just anything else like advertising, repairs and maintenance, rent, insurance, your tax fee for your business, interest that's related to your business, office expense, um, meals expense. Okay, all of these different things are things that if you've done it for the business, it can be written off on your business tax return. Okay. I hope that helps, but definitely throw another question out there if I put off a light bulb for you. Someone's saying here, I think I answered that one over on the other side there. Do you still have to file a tax return even though you don't have income? Okay, it depends if you have any expenses that you want to write off. Okay, here's another one. You are a single member LLC, a proprietor, a solo proprietor LLC, single member LLC. Um, you use it for okay, renting to rooms in your house, usually with Airbnb. Okay, so you have Airbnb. Um, and I have income as 1099 and W-2. I had two accounts on Philadelphia tax return and Eclipse platform, one that is under my name and the other under the LLC. My accountant says I should have just my account under my name since all the taxes would go under my name. But Eclipse and the Philly Tax Center doesn't seem to let me do that. They say I am business, so I need to keep it. What can I do? I don't know. I am so far away from Philadelphia. I am on the western side of Pennsylvania. I don't deal with Pennsylvania local taxes, so I do apologize. Um, yeah, your accountant probably knows what they're talking about, seeing that they're probably from that area. Although if you second guess it, then maybe there's someone at your SBDC that might be able to help you out and just verifying it. Or can you even call somebody at the Philadelphia Tax Center and something? I mean, well, I guess you said that Eclipse in the Philly Tax Center doesn't seem to let me do that. So if you're trying it online, it doesn't seem to let you do it, then you might want to call them and run this by them as well, or find an email to send to them, and try to get that answer. Sorry, I can't answer that question. Okay. This person here is a mental health counselor doing telehealth from her home. I know about separating personal and business expenses. Do you have any suggestions for how to track or separate business only expenses versus home expenses that can be included in the business use of my home office? Yeah, that's what I started thinking about right away was home office. When you have your account, when you take your stuff to your accountant, maybe you're already thinking this, um, since you're operating out of your house for your business, so any of you that have your own business and you're operating out of your house, you're going to figure out the square footage of your office, and also square footage of storage space that you're using for the business, and write that down. And then you're going to figure out the square footage of your living area of your entire place. Excuse me, and write that down. So you have square footage of your office and inventory storage space, as well as like if you're a landscaper, you might have, part of your garage, maybe not the entire garage, but part of your garage is like storage for your landscaping business. Okay, that's one square footage. Then you have the square footage of your entire living area. And if you are including part of the garage as storage space over here, then over on this side, um, um, you need to add in, as total living area, the part of the garage that you're not using for storage space. Okay. Um, then you start looking at your utilities and you just add up all your utilities. Don't do any kind of, calculations or anything. Just add up all of your electric, gas, water, sewage, garbage, internet, TV, all of that stuff, all of your utilities. Also, gather up how much you paid for insurance on your property. Gather up how much your property taxes are that you paid for the year. Um, Mortgage interest, not mortgage payment, but mortgage interest. So let me think down the form here. Mortgage interest, insurance, and then something else on there that I wouldn't have included was repairs and maintenance for your house and your property. You can take all of that stuff into your accountant. Your accountant will do calculations for you. Your accountant in their tax program is going to put in the square footage of your office storage space, and they're going to put in the square footage of your total living space. And then they're going to put in all of these utilities and insurance and everything that I told you. And with their program, they're going to calculate what your home office deduction can be. So let me come back and visit this. Operating out of your house, you know how you know about separating business and personal, track separating business only expenses versus home. Yeah, so I think I answered that. I hope I did. Okay, going over to the chat side, then I'll come back over to the Q&A side here. I appreciate all of these questions. This is great. This person's saying, where can I get an affordable accountant? Does the SBDC have any resources? So yeah, I mean, the SBDC, we try to stay up on who the accountants and the insurance agents and the attorneys are and the bankers, all of these different people, because we consider them partners of ours because we're not trying to do their job for them. We're here again for business consulting purposes. So you could ask your accountant if they have a list of accountants, and a lot of times I think what SBDC consultants will do. I mean, I'm one myself, so I know what I would do. That's what I'm going to share with you. Is those that I've had experience with, those that I have an idea what they do. Those I create referrals based on that. Okay, so yeah, I know these few accountants, they've done really well for my clients. Here's a few, feel free to reach out to them. Or if I just don't know, then I do just give you a list and say, hey, here's a list of accountants, but I really don't know, if they're going to be able to help you or not. I have been hearing, depending on where you're located in Pennsylvania, that accountants are extremely hard to find. So it sounds like as they're getting older, okay, they're not wanting to do as much anymore. Sounds like everybody, right? As we get older, we want to kind of slow down, and so they no longer are accepting more clients. They're no longer in that growth stage. They're more in that maturity stage that we talked about on the slides, and they just kind of want to just hang out a little bit. Okay. Um, so when looking for an accountant though, and this is dependent on every business, so this cannot be for everybody. But there are different types of accountants. There are general accountants that may have or may not have went to college for accounting, but they've learned it somehow, and they maybe do a lot of professional development, and they prepare your taxes, and they're open like a few months out of the year. Then there's other accountants that are open year round because they do, tax returns, payroll, bookkeeping, and such. So that's another level. And then there's what we call certified public accountants, as well as EAs, enrolled agents. They're like the next step up. They definitely went to college. They studied and they took this test, and they get this certification called CPA. And then you have your big box stores like H&R Block, and there's another one I can't ever remember what it's called for the life of me. And but they set up in Walmarts, things like that. So those are your different levels of accountants. They all are good. I wouldn't say any of them are bad. Main thing is ask them, how long have you been in business for? Ask them, do you have experience with this type of business, whether it be a landscaping business or a restaurant or a massage therapist? Okay. Do they have experience in that type of business? And then also ask them, do you have experience with sole proprietorships, or if you're an LLC, or if you're a partnership, or if you're an S corporation, or if, something like that? Ask them what their experience is. Sometimes as soon as you mention partnership, nope, not interested. You mention S corporation, nope, not interested. So you want to kind of interview the accountant, but at the same time, the accountant is interviewing you. And then of course you can ask them how much they charge, and they'll probably just give you a ballpark. It's kind of like it's kind of like going to the doctor. You never know how much it's going to cost you until it's all done, right? Same thing with taxes or going to an attorney, same thing. You can't quote it up front because you don't know what you're going to get into. Everybody's tax return is different. Some of you are very organized, some of you are very messy. Okay. The messy ones are going to pay the most. Those that are really organized and are willing to be told what they can do to do better, to make the accountant's job easier, your price will be better than what a messy person's going to be. So I hope that's helpful. Um, okay. Okay, so coming back to this one, just taking a look here. Okay, so you mistakenly filed your business under a sole proprietorship, but you were advised to change over to an LLC. Is this also something I can do myself? And do I need to contact the IRS of the change? Oh, yeah. Okay. So it depends on what you've all done as a sole. As a sole, you may have registered a fictitious name. Yes, that can be transferred over to a LLC. You can give your fictitious name to the LLC. But there's paperwork involved there. You can find that on the Pennsylvania Department of State's website, if you know where to go. But yes, it can be done yourself. Um, if you if you obtained a EIN as a sole, then that EIN stays with you personally forever. You have to get a new EIN for the LLC. Um, but can you do it all yourself? Absolutely. Pennsylvania has made these things doable, as has the IRS. So yes, you can transition from a sole to an LLC. There's steps that you have to take. I'm thinking, it's probably best that you reach out to your SBDC consultant if you haven't already, and then they may refer you to the Penn State Law Clinic for additional assistance, which is offered at no charge. And to help you with this transition. You just want to make sure that you cover all of your bases, okay? If you already have a checking account, as a sole proprietorship, if you already have a checking account and insurance, once you form the LLC and you make that transition, the banks and the insurance companies will be able to do that for you, make their transition as well. Okay. So if you give me more information, like, do you have an EIN number? Do you have a fictitious name registered with the state of Pennsylvania? Do you have a sales tax license? Because we're gonna have to do something with that as well. Then I can probably help you answer those questions a little more, or just go to your local SBDC consultant. I think they can help you, direct you with that. This person's saying, I didn't file yet. I am just wondering if they will hit me with a penalty because I didn't pay the taxes in the quarter they were earned. If you're talking sales tax, then yes, they would hit you with a penalty if when you go backwards and you file your sales tax for a previous quarter. But if you're just talking like sales and expenses and what's left over is either a profit or a loss after you subtract your expenses from your sales, then then there's really no quarterly filing. Okay. Um, you just do it all at the end of the year on your tax return. So there won't be a penalty for not filing it earlier throughout the year. Now, exception, there's always these like caveats, right? If you're a business that makes a lot of money, I'm just kind of assuming maybe this is that person that said something about $300 profit or something, okay? You're not, you just do it on your personal tax return, your end of year tax return. But if you're a business that is used to making quarterly payments because you make a lot of profit throughout the year, and so you send in quarterly estimated payments to the IRS, Pennsylvania, and the local government. And if you don't make those quarterly estimated payments, which are not required, they're just highly suggested. And so if you don't make those payments and you owe a bunch of money at the end of the year, you are going to get penalized for owing a lot of money at the end of the year. So they don't necessarily penalize you for not making the quarterly payments. They penalize you for owing them too much at the end of the year. They want their money throughout the year and not just at one time. Let's see here. So someone's saying, so QuickBooks would help me keep track of everything. Absolutely. I mean, it doesn't do it all for you. It takes a lot of work on your end. It's, you have to, a human being takes part. But for anyone that's looking for a bookkeeping system, QuickBooks is a great one. Again, there are other ones out there as well, but it's kind of like, if you need a tissue to blow your nose, you might say, give me a Kleenex, because just that is such a popular name now, right? And so you think of a Kleenex as a tissue, although it's just a brand name. So when we think of a bookkeeping system, some of us just automatically say QuickBooks because that is the household name today. And it is the company that is the biggest out there. So most people use it. Most accountants use QuickBooks versus any of the other bookkeeping systems. Um, the great thing about these online bookkeeping systems is that they import your banking information from your checking account for your business, and it makes the recording of income and expenses so much easier doing it that way. Now, also, if you are someone that does invoices, because you do a service today, but you get payment later on, so you got to use an invoice. You still create your invoices within QuickBooks. You can still enter your bills in QuickBooks. So there's still some manual entry as well. But it's a great, any type of online bookkeeping system is great. There are also spreadsheets. You can track your income and expenses with spreadsheets as well. Because some of you are like, I don't have the money for a bookkeeping system, or hey, I like Excel spreadsheets. I'm just going to do it all in there. That's fine too, as long as you have a way to track and categorize your income and your expenses, and then build your spreadsheet out so that it gives you a summary statement at the end of the year, what we call an income statement or a profit and loss statement. Make sure it summarizes that at the end of the year, because your accountant is going to want that. They don't want to go through all of your messiness throughout the year. They just want their summary statement. Um, okay, next up here. I'm starting to run out of questions, so you better give me some more because we have like 7 more minutes. unless I give this last person my 7 minutes. I'm just starting out with consulting services as a sole proprietorship, no business income yet. Can I skip the April 2026 quarterly estimated tax payment, or should I pay something minimal to the federal and the state? So if you're just starting your business and you have no income and expenses, I'm not sure. Yeah, no. The answer is no. If an accountant gave you these quarterly estimated tax payments, again, they're not required. I've even seen like where an accountant will give a business owner, an existing business owner that's been in business for some years, and they make like, maybe $10,000 estimated quarterly tax payments to the federal government. Okay. So the accountant gives them these four vouchers, each of them say $10,000 on them. Okay. But you can, as the owner of the business, you know your income and expenses throughout the year. You can just take that $10,000 voucher and you can put a line through the 10,000 and you can decrease it to 8,500. You can up it to $12,000 if you want. You can edit those as your income goes up and down. An accountant, when they give you these vouchers to make on a quarterly basis, they're looking at last year's return, so they're looking at old information and trying to predict the future, but you are living the future. Okay. And so when you're living it, if you need to adjust up and down, you can do that yourself. So if you're just starting out and you have no income yet, you do not need to make any estimated quarterly vouchers, not even pay anything minimally, not necessary. Okay. If I could just take it another step further, because I don't see any other questions at this second. If you are someone in your own personal life that for some reason you have to make estimated quarterly payments, so your accountant is telling you to do that, then again, just make whatever your accountant currently gave you for your regular other income that you have. But as for the business, you don't need to make any adjustments for that. Wonderful. 4 minutes to spare. If anyone has a final question, feel free to put it out there. I do appreciate the thank yous that you put out there. I love doing this. We do this every month. So if you found this useful and you just listened and thought it was useful, or you still have more questions that you want to, throw out to me next month, then come back next month. But also, I strongly suggest you always reach out to your SBDC consultant. I just say that all the time because we are a service offered at no charge. We absolutely love what we do, and we're here to help you start your business if that's necessary. If you're already in business, we're here to help you grow your business and prosper. That's what we want to do. This person's saying, in this situation, should I ask for previous year's tax records? If you're buying a business, becoming a part of an existing business, then before you buy any business, you need to have previous year's tax returns to look at. Don't just go by what they say. I don't care how honest you believe them to be. I want to think that everybody's 100% honest with me when they tell me, and I should accept their yes to be yes and their no to be no, but it doesn't mean that they are doing it. Okay. So in this case here, if you're buying a business, you want documentation to speak for themselves. So you need a tax return that shows their income and their expenses, not even just a profit and loss statement from a bookkeeping system. You'd be amazed at how much a tax return can differ from their bookkeeping system that they're using, like QuickBooks. So ask for the official documentation that is being filed with the government. And we do that as consultants. Anybody that's doing a business plan through the SBDC, because a business plan is used for funding to get loans. And if our client is looking to buy a business, they must get the last 3 years tax returns for the business so that we can review it and help out with the financial projections part of the business plan. Plus, if you're taking that business plan to the bank also wants copies of the last 3 years business tax returns. So we build that and put it as an attachment to the business plan. Plus, we talk to you maybe sometime and we say, hey, this just isn't going to be worth it for you because look, last 3 years they showed major losses in their business. Why would you want to buy into a business that's losing money? Okay. And then they might come back and say, well, yeah, but we take money under the table. We don't claim all of the income, or well, in the expenses, we put in some of our personal expenses as well. Okay. And that might be true. That might be true, but all you can do is go by the official documents being filed with the government. So if they say they're not claiming all of their sales, then what was the cash sales that they collected on the table? Show me documentation of that, which they probably don't have because, it's cash under the table. Or if they say that there's personal expenses added into their business expenses, which should be a big no-no, but show that to me. Provide me with documentation on that to show that to me so that I can make a wise decision. Because based on the official documentation of loss, loss, loss for 3 years, it's not a good business for me to buy into. And it also would mean the owner could be, uh, what's the word? Oh, I just had it right there. They're not being upfront. They're not being truthful. Okay. And they're not being truthful with the government. They may not be truthful with you as well. I don't know anything about what you're talking about. I'm just throwing out all this stuff, okay, for you to think about. Okay. It is 12 o'clock, everyone. I again hope that you enjoyed this, and I will email you the PowerPoint that I've had up on the screen here for you to have. I will also let you know again that the YouTube video, this has been recorded, so it will be uploaded to YouTube onto our playlist. And if you have any further questions, we'll see you back here next month. Take care, everyone. We'll see you.